Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in financial reports. And let's just say for CytoDyn Incorporated, this quarter's story has a few dramatic twists and turns that will make your head spin. We are diving deep into CytoDyn Incorporated's latest quarterly report, a document that paints a fascinating picture of a company navigating some really tough financial waters, with some recent good news and lingering concerns. Let us get straight into the numbers, and first up, on the 31st August 2025, CytoDyn Incorporated had total assets of about $13.5 million. Now, that might sound like not a lot for a biotechnology company, and compared to their liabilities, it really is. Because on that same date, they had current liabilities, which are debts due within a year, totaling almost $69.5 million. That is a pretty big gap. Folks, they owe way more than they have in assets right now. And looking at their long-term financial health, things get even more stark. As of the 31st of August 2025, their accumulated deficit, which is basically a running total of all the losses the company has ever had minus any profits, was a staggering $893.3 million. This means that since this company started, it has lost a lot more money than it has ever made. Now let's talk about how they did in the last 3 months leading up to the 31st of August 2025. The company reported a net loss of $5.5 million. This is quite a change from the same period last year when they actually reported a net income, meaning a profit of $19.2 million. A big reason for the swings in their performance is their research and development spending. In the 3 months ended the 31st of August 2025, they spent $3.2 million on research and development. This is a huge jump from the same period last year when their research and development expenses were listed as negative $24 million. So what does this negative number mean? Well, it looks like last year they got a substantial credit for clinical expenses, likely from a settlement which boosted their income. This year, they are simply spending more money as they continue their clinical trials. Overall, looking at total operating expenses, they jumped from a negative $22.4 million in the prior year to a positive $4.9 million in the recent period. So while it might look like expenses are way up, it is more accurate to say that last year they had a massive one. Time credit that made their expenses look like a gain. And this year they are back to spending money on their operations, which is normal for a company in their stage. When we look at cash flow, which is the actual cash moving in and out of the company, things become clearer. In the 3 months ended the 31st of August 2025, CytoDyn Incorporated used $2.5 million in cash from its operating activities. This is a big change from the same period last year when they actually generated $5.4 million in cash from operations. This shift primarily happened because last year they had a significant legal settlement that brought in cash. And when we talk about financing activities, which is how companies raise money through selling stock or taking out loans, we see another shift in the 3 months ended the 31st of August 2025. They actually used a small amount of cash, about $0.1 million, in financing activities. This is a huge drop from the same period last year when they brought in almost $9.7 million. This indicates they were not actively raising significant new funds through financing in the recent period. Let's talk about their debt, specifically the convertible notes on the 23rd of April 2021. They issued a note with a principal amount of $28.5 million. As of the 31st of August 2025, the outstanding balance on this note, including interest, was about $35.4 million. So the debt has actually grown since it was issued, even with payments. This is likely due to accrued interest. On their balance sheet, the convertible notes payable net stood at $27.2 million on both May 31, 2025 and the 31st of August 2025. This suggests that while they might be making interest payments, the principal amount of the notes themselves remained relatively stable. Now, about their stock, as of the 31st of August 2025, they had over 1.257 billion shares of common stock issued. This stock is the foundation of their capital structure, but with so many shares and a significant accumulated deficit, it highlights the challenge of generating value for existing shareholders, especially with potential future stock issuances. Looking at their employee compensation, they have performance share units, or SUS. As of the 31st of August 2025, there were 3.5 million unvested SUS. These are shares given to employees that will only vest, meaning become fully theirs, if certain performance goals are met. There is still about $1.4 million in unrecognized compensation expense related to these units. Now, for some potentially good news in September 2025, both the Securities and Exchange Commission, or the SEC, and the Department of Justice, or the DOJ, informed the company that their investigations were effectively closed, meaning they do not require anything further from CytoDyn Incorporated. This is a significant positive development, as investigations can be a major drain on resources and create uncertainty. However, the company is still facing a number of legal challenges. They are involved in several shareholder derivative lawsuits, essentially lawsuits brought by shareholders on behalf of the company against its directors and officers. These lawsuits allege breaches of fiduciary duty, misleading statements, and insider trading. The company denies all these allegations and plans to fight them vigorously. Given the early stage of these cases and the unspecified damages, it is impossible to predict the outcome or potential financial impact. There is also an investor lawsuit from January of this year where former investors are claiming they were issued the wrong number of shares back in 2022 and are seeking more. They are bringing claims of breach of fiduciary duty, fraud, and contract breaches. CytoDyn Inc. believes these claims are baseless and plans a strong defense. Now let us tie this all together with a look at their overall financial standing. As of the 31st of August 2025, CytoDyn Inc. had about $9.3 million in cash. This sounds healthy, but remember their short-term liabilities were almost $70 million. This means they have a serious cash crunch coming up. This leads to what is called the going concern issue, which is a big red flag in financial reporting. The auditors essentially say that the company's ability to stay in business depends on it getting more money to operate. This is because, as we've seen, they have consistent losses, a huge accumulated deficit, and a lot of liabilities. They plan to raise money through selling more stock or seeking debt, but there is no guarantee they will succeed. So, what is the story here? CytoDyn Inc. is a clinical stage company focused on developing its drug leronlimab. They have some promising developments in their research and the closing of SEC and D. OJ investigations is a huge relief. However, the financial picture is challenging. They have significantly more debt than assets, a massive accumulated deficit, and they are burning through cash. The lawsuits are another significant risk factor. While they have a plan to raise more capital, it is a high-stakes gamble. Their future really hinges on securing that funding and successfully bringing leronlimab to market. That is our decoder on CytoDyn Inc.'s latest report. What do you think about their financial situation and their chances of success? Let us know in the comments. If you found this breakdown useful, please hit that like button and subscribe for more deep dives into company filings. And don't forget to join our Discord community. The link is in the description box below. Thanks for watching. See you next time.